Welcome, traders, to Forex Basics brought to you by Fashion FX. In this lesson, I will explain the fundamentals of Forex trading in a simple way so that beginners can understand. Forex stands for foreign exchange. It is the market where different currencies around the world are bought and sold. Forex is the largest and most liquid market in the world, with trillions of dollars traded every day. In this video, we will cover the most common currency pairs, what influences currency rates, how to read codes, what is a lot size, how does a leverage work, tips and warnings, and introduction to multiple time frame analysis. Disclaimer: this video is not a financial advice. I'm just sharing what I personally learned. Let's get started. Stepping on the world, we never getting too late. But these niggas hating, we don't care about your face. We want the power, not the late. I be rolling with my niggas every day. Hands reaching for my niggas on the way again. We just tryna go and get the checks and make a change. Switching the beat, killing the beat, now we're gonna rest. I'm the best, I want the money, I'm getting it fast. Section 1. The most common currency pairs. In Forex, currencies are traded in pairs, and the most common currency pairs include Euro USD, USD CHF, GBP USD, USD JPY, USD CAD, and Euro JPY. These are known as major currency pairs because they have high liquidity. And the most traded pair in the world is Euro USD, which accounts for about 28% of all Forex trades. That means nearly one third of Forex transactions involve Euro USD. Section 2. What influences currency rates? Currency prices changes because of many factors. One major influence is central banks. They control interest rates, money supply, and mandatory reserve funds. Another influence is a country's economic condition, such as growth, inflation, and employment. Politics also plays an important role. Political stability, government changes, and public statement can all affect currency prices. All these factors together cause prices to rise and fall. Now, let's look at the real world example of how news and events can affect the Forex market. In this example, we're looking at Euro USD and how the euro rate dropped due to political and economical events in Europe. Event number 1. First, the Prime Minister of Greece announced referendum. This created uncertainty in the market because investors were unsure about Greece's future in the European Union. Uncertainty causes fear, and fear causes traders to sell the euro. Event number 2. The European Central Bank announced a new president. Whenever leadership changes in a central bank, markets react because traders are unsure how the new leadership will handle interest rates and monetary policy. This added more pressure on the euro. Event number 3. Berlusconi resigns, which increased political instability in the euro. Political instability weakens confidence in a currency, and as confidence drops, investors reduce exposure. Event number 4. Central banks agrees to stimulate liquidity in financial transactions. While liquidity support helps market in the long term, In the short term, it can weaken a currency due to increased money supply. Finally, the European Union could not agree on changes to the treaty. They showed division within the EU, which further reduced confidence in the euro. As confidence dropped, the euro continued to fall. Section 3. How to read codes. In Forex, prices are shown as codes. A code has two prices: the bid price, which is the buying price, the ask price, which is the selling price. Each price movement is measured in pips. A pip is usually the fourth decimal point in most currency pairs. And the difference between the bid and the ask price is called a spread. Understanding codes is essential for knowing where you enter and exit your trades. Section 4. What is a lot size? A lot size is the standard transaction size in the Forex market, which is equals to 100,000 units of the base currency. There are different lot sizes. Standard lot, which is equals to 100,000 units. Mini lot, which is equals to 10,000 units. Micro lot, which is equals to 1,000 units. For example, opening a position for 138,000 US dollars at a one lot, which with a leverage of 1 is to 10. And the Euro USD exchange rate is 1.3800. A month later, the position is being closed with an exchange of 1.3108. The rate difference is 692 points in your favor. So the profit is going to be $6,920. Smaller lot sizes are recommended for beginners because they help reduce risk. Section 5. How does leverage works? Leverage allows traders to open positions larger than their account balance. So, leverage works as a multiplier. For example, to open a 10,000 position, you can use a margin of $25 with a leverage of 1 is to 400. 25 multiplied by 400 is equals to 10,000. So this means leverage increases both profit potential and risk. So it must be used responsibly. Section 5. Multiple time frame analysis. The market can be analyzed using multiple time frames such as minutes, hours, days, and weeks. Higher time frames shows the overall trend, while lower time frames help identify entries and exit points. Forex trading happens in different market sessions. Firstly, we have London session, New York session, Tokyo session, and Asian session. The busiest times is when sessions overlaps because trading volumes increases. And now we have reached the end of the Forex Basics lesson. And we covered the key concept every trader needs to understand before trading Forex, including currency pairs, price influence, codes, lot sizes, leverage, and also remember, Forex trading is a skill, not a shortcut to riches. Thank you for learning with Fashion FX. If you found this video helpful, don't forget to like, subscribe, and continue with the next lesson in this series. Thank you. Tryna go and get the checks and make a change. Switching the beat, killing the beat, never gonna rest. I'm the best, I want the money, I'm getting it fast. Nothing is funny, you niggas, you hate it. All my niggas on the way, we're getting it made. Whoa, Banamanga, yeah, yeah. Everybody's a collar, yeah.